How to beat the S&P 500 and the stock market in general. That's what we're talking about here today, folks. I'm going to take you through 7 steps on how you can beat the stock market, which is, I think, one of the most fascinating subjects you can possibly imagine. So congratulations on clicking on this video. I don't think there's going to be a more valuable video you will watch this year from anybody out there, certainly on YouTube. So I appreciate everybody joining me for this one. I hope you get a tremendous amount of value. And if you get a lot of value out of a video like this, let me know in that comment section that you're getting a lot of value out of this. That makes me feel good that at least I'm providing you guys with some good content out there and something you can take from this video and hopefully adapt in your own portfolios over time. So appreciate everybody joining me as always. Thanks for being subscribed, folks. So I have significantly outperformed the stock market in the public account, which is a portfolio I started about a little over 5 years ago now. At this point in time, inside the private stock group, where they've been able to see every single move I've ever made in there, every single buy, every single sell I've ever made in there. On a this is all calculated by Fidelity Investments, the most reputable stock brokerage in the world. Time-weighted rate of return, as far as the public count over the past 5 years, 22% on an annualized basis. On a money-weighted rate of return, we're at 19.7% on a 5-year basis. So whichever way you want to do it, essentially, I'm crushing the market. The S&P 500's at a little over a 12% gain on average over the last 5 years. Dow Jones U.S. Total Stock Market Index, about a little over 11% gain over the past 5 years on average. Okay, so those are annualized returns. We've absolutely crushed the market, obviously, and that's despite making several key mistakes in that portfolio. I certainly haven't run that portfolio perfect at all, and still absolutely crushed the market. And it's not even close. That's the thing. It's not even like a close game here. And this is why I do this game, right? This is why I spend all this time researching companies, investing, taking the risk and those sorts of things, is for this sort of outperformance. Because when you run these numbers over a 10, 20, 30-year span, the way it's going to change your net worth is dramatic. There's 2 things that can massively change your net worth when it comes to investing, okay? It's very important to understand these 2 things. The 2 things are how much money you're able to put in your portfolios and what is your rate of return. Those are the 2 things that are going to drive your long-term wealth in a massive way. How much can you invest on an every month basis, and what's your rate of return, okay? And so the goal is to make as much money as possible, to invest as much money of that money as possible, and then to get as high of a rate of return as possible, right? That's the whole game in regards to this. And so the public account now, like I said, it's a little over 5 years old. It's over $1.7 million now at this point in time, right? And it's interesting because I started this portfolio for 2 reasons, a public account. One reason is, as somebody that is a teacher of this subject, right, of stock market investing and how to be a successful investor and understanding all these things, something I realized is no one really puts their money where their mouth is. Like, you could read a book on investing, you could, buy a course on investing, these sorts of things, but no one's really putting up money like that. And so I'm like, let's build a real money portfolio and show people how it's done so people can actually learn from me and learn how I diversify a portfolio, the moves I make in there and things like that. And the second reason I started that portfolio, other than that, was back in those days when I was on YouTube, there was a lot of debate about, well, you can't outperform the market. You're not going to be able to outperform the market, and a lot of stuff like that. I was just like, okay, that's laughable to me. Like that's almost a joke. Like, you kidding me? I can't outperform the market. Okay, that's a funny joke. But the more I started to realize and go down the rabbit hole over the years, the more I started to realize it's not a problem with me. It's just like people literally don't think you can outperform the market, which is the biggest crock of crap you could ever possibly believe. But a lot of people are brainwashed to think that, unfortunately, without any evidence whatsoever. Like, they're just brainwashed like that, right? And you got all these things kind of go together, right? You can't beat the market. You can't get rich. You can't get famous. Like, all these things go together. You can do any of those things. Like, literally any of them. Any of them. You can beat the market. Yes, you damn can. You can get rich. Yes, you can. You can get famous. You can become a pro athlete. Whatever you want to do in this world, right? But we do know a couple things. You better put in a heck of a lot of work, and you better have a great strategy. If you don't have a great strategy and you weren't willing to put in a lot of work, yeah, you're not going to achieve any of that stuff. I can tell you that. You're talking about being an outperformer. You're talking about being the creme de la creme, right? And so if you want to achieve anything big in life, right, which I would say, if you can consistently beat the market over a 5-10 year span, that's pretty darn big, right? you're going to have to put in a lot of work, and you're going to have a great strategy on how you actually pull that off, right? Because you're talking about being somebody that is in the minority of folks out there in order to achieve these sorts of things. And in order to beat the market, you don't need to work on Wall Street. Absolutely not. I mean, most people that work on Wall Street can't even keep up with the indexes. Literally, they're underperforming the indexes. Like, if you look at their public account, okay, they're underperforming the market. They can't even keep up with the market, okay? You don't need to live in Wall Street. You don't need to live in New York City, right? Financial district. You don't need any of that. Look at Warren Buffett. Man's done tremendous over the years, and the net worth that man's built out is insane, right? He lives in Omaha, Nebraska. He doesn't even go to New York hardly ever. And it's incredible to see what that man's built from Omaha, Nebraska. You don't have to be in New York City. You could be anywhere in the world. It has nothing to do, and actually, and Warren Buffett will tell you, the more you're around these Wall Street folks and more you're in New York City and places like that, the more likely you are to actually underperform the market, because the more you get into like group think. And a lot of these Wall Streeters all talk to each other and they start kind of thinking the same, and they're all running out of the market. When everybody else is running out of the market, they're all running into the market when it's FOMO time. And that's why a lot of these Wall Streeters can't even keep up with the market. They can't even dream to beat the market. They can't even keep up with the dang thing, okay? You don't have to get straight A's, and you don't have to have a super high IQ. This is not to beat the market, to beat the stock market, to beat the S&P 500. It's not a game of like who has the highest IQ. That's just not it, okay? That's not it at all. There's a lot of people that have very high IQs or would be horrible at stock market investing and understanding how to run portfolios and things like that, okay? Now, let's get into these steps to beat the market. Hope you guys enjoy this. We'll take you through each of these. And appreciate you joining me, okay? First one of these 7 steps in order, if you want to beat the market, you better put in the dang work, okay? A lot of people, it cracks me up, they will put huge amounts of their money and life savings in stocks without even doing any research on these stocks. It's absolutely incredible. They don't look at the 10Ks and read through those. They don't read the 10Qs. They don't listen to conference calls. They don't listen to investor presentations. It's unbelievable. And as somebody that's been on YouTube now for, how many years have I been on YouTube? 7 years, if not more than 7 years. I've seen so many retail investors come and go. And it's crazy, because so many of these folks will put huge amounts of their life savings in stocks without even ever doing research on them. Without even, this is the easy part of a stock market investing, is doing the research. All it takes is some time. And you might say, I don't have time. Yes, you have time. Yes, you have time, okay? I've been doing this game for a long time, and I've always made time to research. When I started investing, I was working 3 part-time jobs, going to college full-time, and running track for the college team full-time, okay? And I still made time for investing. Nowadays, I have a wife, I have 3 kids, I have my big YouTube channels, I have my private stock group, right? I have all these other commitments in life, and yet I still find plenty of time to listen to conference calls, to read these reports. If you don't want to do the work, then you're not cut out for this game. If you don't want to read through a 10K, if you don't want to listen to a conference call, if you don't want to listen to an investor presentation, you are not cut out for this game. You can click off this video now. Go watch some Mr. Beast or something. Go be entertained. You're not that guy, okay? You're not that guy if you don't want to put in the work, okay? Or that girl. You're not that girl or that guy if you don't want to put in the work. You better be willing to put in that work, or you have no chance in this game. Not only will you not beat the market, you won't even come close to keeping up with the market over a 5 or 10 year span if you're not willing to put in the work. You have to keep up with these things. And it's so easy nowadays. This isn't complicated. But when I first started in the stock market, I used to have to contact companies so they could send me like physical annual reports and 10Q reports and things like that. Nowadays, this is so easy, man. Literally go on Google, type in PayPal IR or PayPal Investor Relations, if that's a company, or Apple Investor Relations, or whoever, okay? And boom, right there in front of you. You're going to have all the reports and all the things you could ever want. All the SEC reports, all the quarterly reports, all the annual reports, all the events of the company, all the news with the company. It's all right there, laid out for you. It is absolutely beautiful. And nowadays, there's even apps like this app, which basically just has earnings calls on it, that, I'll be laying in bed at night and just, put in my AirPods or whatever, or, while I'm working, put on a conference call, something like that, and boom, listen to a conference call right on an app. So easy, man. So dang easy. This game is so much easier than it used to be back in the day. Back in the day, to get a conference call, it used to be much more complicated, I can tell you that. To get your hands on an annual report, a 10Q, anything. Now you can do it in 10 to 15 seconds. Boom. All the data you could ever want right in front of you in 10 to 15 seconds, man. Boom. So there's no excuse for not doing the work. You do have the time. I promise you that. And if you're going to still make excuses, you're not cut out for this. The second thing, in order to outperform the market over time, is GVD 1, 2, 3. This is my strategy: growth, value, dividends. And this is how I build out a very well diversified portfolio over time. And this is how I can weather a storm. This is how I can weather making a mistake in a stock or losing money on a stock, right? Because you will lose money on stocks. And this is how I can weather that storm, because I own several stocks in different categories. Some are the growth stocks, some are value, some are dividend stocks, right? And so the way I'll kind of put it to you like this is, you're going to have your main growth stock that's going to be your biggest position. Then you should own another growth stock that's a little smaller position. Then you should own another growth stock that's a little smaller position. Then you should have a lot of money in a value stock sometime. Then a little less money, then a little less money, right? And sometimes value stocks and dividend stocks go together, because a lot of value stocks also pay dividends. And then maybe you have a spec stock, a hedge stock, or something to hedge your portfolio overall, right? And then the beautiful thing with this strategy is there's different opportunities in different places of the market. And you've got to learn there's certain elements you have to learn to be, if you want to do what I'm doing and outperform the market, beat the market, you have to learn these different disciplines. You have to learn how to growth invest, how to invest in dividend stocks successfully, value stocks, especially if you want to do this over a 5-10 year span, right? Because anybody can outperform the market over a day, over a week, or over a month, maybe even over a year. But over a 5-year or 10-year span, that's a whole different ballgame when it comes to that. There's no luck involved in that. Now we're talking about strictly skill. And so by learning the disciplines of a growth investor, of a value investor, a dividend investor, you can put yourself in a position where you can capitalize on any sorts of opportunities out there in the market, which certainly, 2022 is a perfect example. 2022 was a year no one wanted a piece of anything growth stock related. So if you knew what you were doing in regards to growth stocks, you were able to pick up a lot of great growth stocks at insanely undervalued valuations throughout 2022. It was incredible. We haven't really seen deals like that when it came to growth stocks really since, honestly, like the great financial crisis, in terms of the amount of growth stocks that were down 50, 60, 70, 80% was a long list of great growth companies, right? There's certain other years where value stocks and dividend stocks are more of a, let's call it opportunity. And actually in 2023, that's where I see a lot of opportunities in this market. A lot of value stocks and dividend stocks are really good values. And so if you own all these different stocks, you understand these different disciplines, you could be a well-rounded investor. If all you know how to do is growth invest, or all you know how to do is pick value stocks or dividend stocks, you're just going to limit your returns in a substantial way over time. And you're going to miss a lot of opportunities. You're going to get into some stocks at some very bad prices. And the way I look at this, right, is each and every month you should have your financial life in a situation, right? If you look at kind of, what you have coming in for income versus your expenses, you should always have some fresh capital out there, right? And depending upon where the opportunities are, you're able to deploy capital in wherever those opportunities are, right? So let's say you got, this value stock right here is trading, it went down another 20% and you feel like the market's got it completely wrong. You can put fresh capital there, right? Let's say no one wants a piece of growth stocks at a particular time. Let's say this was 2022, right? You can put your fresh capital in those growth stocks. Like, man, this is like, shooting fish in a barrel, as they say, right? Deals everywhere. And so GVD 1, 2, 3, building out your portfolio. Make sure you have your money allocated in the stocks you believe in the most, but make sure you're staying disciplined. Growth stocks, value stocks, dividend stocks, okay? Third step, if you want to outperform the market, is buy the dip, okay? One of the most famous sayings in the stock market is buy the dip. Now, the issue with this is most people don't buy the dip. It's arguably the most famous saying in the stock market, buy the dip. But how few people actually do it is another thing. Most people, when the stock market's going down in a major way, when there's all these incredible opportunities and there's all these stocks down 30, 40, 50, 60%, whatever, right? Most people do not take advantage of buying the dip. And great companies that have tremendous fundamentals and have great CEOs and have great, futures in front of them, people don't buy the dip in those stocks. And it's absolutely one of the worst decisions you can ever make. Like, when you get great companies at silly prices and they're down significantly, understand first that doesn't happen very often. And so when you do get those rare opportunities for truly great companies with truly great CEOs and business models, trading at extremely low prices, you better buy the dip and you better take advantage of those deals in the market, because you might not get another opportunity in great companies for another 5, 10, 15 years. And the other thing is, with great companies, our market caps obviously keep going up over time. Their stock price keep going up over time. So let's say you're buying XYZ company. It's a great company at $50 a share, right? Or let's say you have an opportunity at $50 a share. The stock was at 100, it went down to 50, and you decide not to buy the dip, let's say, for instance, right? Now the stock goes up and up and up for the next many years, goes to $500 a share, right? Now it has its next big crash, and 5 years later or whatever, and it crashes down to 250. Well, now you can buy the dip at $250 instead of buying it at $50, right? And so that's where you get in trouble if you don't take advantage of these deals when they're presented, and you're like, I think I can get it for a few pennies lower, or a few bucks lower, or a few percent lower, or something like that. In great companies, take advantage of those deals. If it's a subpar company, if it's a questionable management team, if it's a questionable business model, if it's unprofitable, that can be a different story. But for truly great companies, I'll give you a couple examples of perfect examples of buy the dip on great companies, okay? One of those is Meta, right? Meta's a stock, and it looks so grand now, right? We're sitting on about a $300,000 gain on Meta stock in the public account. It's absolutely beautiful, right? I've bought the dip and bought the dip and bought the dip on Meta a lot of times. I have 5 pages of buying dip on Meta stock over time, right? And so the profits have been enormous, obviously, but I bought the dip a lot of times, and the profits are actually going to be much more substantial for Meta over the coming years, in my opinion, than what it is now. This is a perfect example of a great company with a proven CEO and a proven business model, very profitable, buy the dip, great balance sheet, all those things, right? Palantir, another example, great balance sheet, proven CEO, has been leading the company a long time now at this point in time, right? And I bought the dip, and I bought the dip, and I bought the dip many, many times, right? And obviously we're doing tremendous on the stock, and I think we're going to be doing a whole lot better on Palantir over time. So when you're getting great companies that have great long-term futures in front of themselves, very good balance sheets, and are on very stable footing, you get those opportunities, you better take advantage of those opportunities, because those are the best deals you'll ever get in the market, okay? Next one up here, 4th step on if you want to outperform the market over time and beat the stock market is learn from mistakes, but do not let them cripple you. A lot of people in the stock market let a mistake cripple them, and they never know how to overcome that mistake. This is life. You will make mistakes. I don't know if anybody ever told you this, but you will make mistakes, okay? The stock market is a representation of life itself. You will make mistakes. Do not let those mistakes cripple you, or you will forever be in a fear state, okay? And so if I think about the public count, right? We've crushed the market over the past 5 years, and we're going to, in my opinion, we're going to absolutely obliterate the market this next 5 years. I won't even be close. I mean, it's not even close now, but I think the returns we're going to get the next 5 years is going to be disgusting, okay? Now, keep in mind, these returns are with 2 stocks in the past 5 years that were in the public count that went under when BK had to file for BK, and we still killed the market, right? Which still goes to show you, you can still crush the market even with making some big mistakes. Now, imagine if I never had bought those stocks. I mean, what are we sitting on? 30, 40, 50, 60% gains a year, annualized returns on average over the past 5 years? Yeah, we might have been. But nonetheless, I learned from those mistakes. I won't make those mistakes again. And we move on, right? And we still crush the market even with those 2 mistakes in there. And so, if you ever played sports, it's something I learned very, very valuable. I learned a lot of things, very valuable things that I've adapted, from basically my childhood and playing sports and becoming an adult and getting into these games of money and all this other stuff, okay? And by the way, if you have kids, if you ever have kids, put them in sports. Try to put them in as many sports as possible. They don't have to be the next LeBron James, the next Tom Brady, but just, they're going to learn a lot of great life lessons in playing sports that they'll be able to take forever, okay? So senior year of high school, I played tackle football for 5 years. In senior year of high school, I took up a position that I never played before called cornerback, okay? And basically your job is to defend against the receiver. Now, in this particular position, it is a given that sometimes this guy is going to catch passes on you. And it's a given that sometimes you're going to get beat for a touchdown. It feels embarrassing because you're kind of out on this island all by yourself. If somebody runs it for a touchdown, the whole defense kind of gets blamed. But if this guy goes deep and he burns me for a touchdown, it's embarrassing, kind of. It is, because you seem like you're the only one that was guarding him and he just scored a touchdown. You just let your whole team down, right? So it's very embarrassing. But when you play cornerback position, you learn something that's very valuable. There's a famous saying that all defensive backs must need to possess short-term memory. Not short-term memory that causes you to forget the play in the huddle. The saying refers to short-term memory that allows you to move on to the next play with a clear mind and extreme confidence. Playing cornerback, confidence is everything. In other words, don't dwell on bad plays and don't get too attached to good plays. Each play is a new opportunity. Make a play. Easier said than done, but it's a necessity, right? And so this is what I learned playing football and playing that specific position is the exact same thing in the stock market, right? Because each new stock you buy is a new opportunity to either lose a massive amount of money or make a massive amount of money. And you have to understand that going in. And you have to play with confidence. The problem is somebody loses money on a stock or two and they're done. They're done. They're mentally broken. And it's because they never learned the ability as a younger person, or they don't want to learn that ability as an older person to overcome failure. Failure is not a choice in the stock market. Failure is a guarantee in the stock market. You will fail. This is business. Investing is business. In business, you are going to fail sometimes. The greatest companies in the world have failed many times. Apple has failed several times throughout its history and launched products and services that just were bad. Things that they did were bad. Mistakes they made that were bad. Software updates that didn't go as planned. Okay, the company nearly went bankrupt at one point. Apple did. Amazon, same exact thing. Tesla, same exact thing. You go through any company, they all have to go through failure. They're going to make big mistakes. They're going to be problems. And you as a person, you're going to fail sometimes. And you have to get over that mentally. If you cannot, then you need to go through a whole mindset shift. You got a long process to go here, okay? And so I learned that very young, and that's what allows me to do what I do, essentially, which I can make a mistake and just get over it because it's on to the next play, baby. It's on to the next play, and I can have an extreme success, and it's on to the next play, right? There's one guarantee in the stock market as a stock market investor. You will sell for a loss sometimes. Do not let that loss cripple you. It's a guarantee. You will lose money sometimes. There's no way around this, okay? The greatest investors ever in history that had incredible 20, 30, 40, 50-year track records, right? Lose money. Warren Buffett probably could show you a list of stocks he's lost money on over time that's so big you wouldn't believe it, right? And the man still has managed to outperform the market over time, and the man still has managed to become one of the wealthiest people in history, right? Stanley Druckenmiller, one of the most amazing investors, right? Incredible track record. Man has made a lot of mistakes over time, and he could run you through all those mistakes. You are going to lose money sometimes. Do not let it cripple you. Learn from whatever your mistake was. Make sure you don't make it in the future, and play with extreme confidence in this game, man. Extreme confidence. My confidence is never shaken because I'm in just a different mental state that I understand it's on to the next play. It's on to the next play. Whether I, killed it on a stock and made 1,000+% gains, or whether I lost, 90% of my money, doesn't matter. It's on to the next play. And I know my strategy works. It's been proven to work clearly in the numbers, and we go on to the next play, okay? Fifth thing, if you want to outperform the stock market over time, you need a home run or two, or three, depending upon how good you are at this game, okay? If you want to outperform the stock market, you better have a big winner or two, right? Because you're going to need to offset a potential loss if you take a loss. And if you want to amp returns up, you better hit a home run or two. So you got to find something over a 5-10 year span that does really, really dang well, okay? And so a couple opportunities I certainly saw in the past and performed from is Elf Beauty, right? Now, Elf Beauty is actually an interesting stock because that's another stock I actually made a big mistake on, right? Didn't let it cripple me, but it was a big mistake I made. Elf Beauty, I held so many shares of Elf Beauty at one point, it's ridiculous. But as the company did better and better, I made a huge mistake and I sold out a lot of my shares. Most of my shares. I only hold 1,000 shares of Elf now at this point in time. Versus back in the day, I held a lot of thousands of shares. Let's just put it that way. And one thing you can learn from this kind of story is if fundamentals of a story are getting better and better with the stock, let it ride, okay? But Elf's a perfect example of a company I saw that was just heavily discounted. I noticed what they were doing with influencers, and I thought, wow, this company has extraordinary potential. I think their brand is in a really good position. I think whether there's a good economy, bad economy, based upon their product pricing, that they're going to do very well for themselves. And what do we have to show for it? A 1,469% gain in the public count over time, right? You look at a stock like Tesla, right? Good old Tesla, my Tesla. I mean, this stock has done absolutely incredible for us over time. Over 1,000% gain in regards to Tesla, right? And this is another one of those, 10x stocks. This is this was actually a spec stock in the public count. This was actually not a big position. My cost base is only $39,000, right? The position looks huge now. It's over $400,000, but I only put $39,000 of cost basis into these shares here, right? And when it comes to Tesla, this is just an extraordinary speculative kind of opportunity I saw in the market where I looked at it and I'm like, this stock kind of trades like a spec stock, but I don't think it's a spec stock. And I think that we're going to move toward, over the next decade or so, like everybody going toward electric vehicles. The Tesla's in the pole position for that. They have an extraordinary CEO, Elon Musk. And I thought this was a great opportunity. And I looked at the demand for Model 3 and it just spoke for itself. This was our Model 3 had already been shown off. And I'm like, no one's creating this sort of buzz around a new vehicle. Like clearly this company's different. And I took a risk on that one, and certainly it paid off in a massive, massive way, right? And so you can find these sorts of opportunities in the market. Another good example, I owned NVIDIA in the public count at one point. I owned NVIDIA. Since that time, the stock is over 10x. And I sold NVIDIA for a small profit, right? So I wish I had held that one through all the way. Holy smokes, that'd be no joke. It's just another one I look at, and I look at those returns we've gotten in the public count, and I think, what would those returns have been if, I didn't sell most of my Elf shares, if I didn't, cash out of it? I mean, but in this game, you're going to make mistakes. It's part of the process, right? You're going to make some things you look back on and you're like, dang, why did I do that? But when you can still crush the market and you can look back and say, there's a lot of things I did wrong, it's a pretty darn good feeling. I will say that, okay? And so you're going to need to find some extraordinary opportunities. And, I can tell you there's a lot of stocks in the market that will be those next 5x, 10x, 15x, 20x type stocks. And it's up for you to identify those out there, find those stocks, and pounce on them and take advantage of those, right? Just don't get too caught up in the story. What happens is a lot of people get caught up into, excitement, and then they risk their whole portfolio on it. If it doesn't work out, it doesn't work out for them, and then their portfolio is in a horrible place, right? Stay diversified in this game. Remember GVD, remember 1, 2, 3. Remember building out a great total portfolio overall, okay? All right, 6 of these 7 steps on how to beat the market. And one of the main reasons I think I've beaten the market so substantially in the public count over this past 5 years is accountability. Now, accountability can be huge. I never really realized how big accountability can be until I started the public count. And so I started this public account, right, in the private stock group, which, by the way, if you're interested in joining applying to join the private stock group, we can see if you're a good fit. That will be the pinned comment down there if you're looking to fill out an application, okay? But what was interesting is when I started that, it's kind of stressful because now everybody can see the portfolio all the time, every single week. They see every single time I buy or sell a stock in there. And so it's stressful in terms of like, wow, now I have all these people that can see every single move I make, right? You're under pressure then. Whereas when I was just a private investor, no one saw anything I was up to, right? Or nothing I was doing, which is kind of a freeing feeling, but it doesn't hold you accountable. And something we do know about humans, we do know this has been scientifically proven, is when you're accountable to somebody, right, you're going to likely do a lot better job. This is why companies have hierarchies, right, and have management and all these sorts of things. They have that all for a reason. And accountability is huge when you're accountable to somebody, right? It's the same reason why, you could take a man and he might have not much purpose in drive and things like that, and then a man has a child And he starts to look at life a little differently, and he starts to get a little more drive than he used to have, right? Because all of a sudden he's looking at it and it's like, man, now I got to support a family. Now I got, kids counting on me and those sorts of things, right? And so accountability is huge. And I think that's one of the reasons we've so significantly outperformed the market over the past 5 years in the public account is for the reason of accountability. I realize, like, if I do anything, like, everybody's going to be questioning it. Everybody's going to be looking at it. Why did you sell out of this stock or that? That accountability is huge. Now, you're not going to have necessarily a group to, basically buy stocks in front of and sell stocks in front of and things like that. But you could have significant others that maybe see your portfolios and see the moves you're up to and things like that, right? But holding yourself accountable, it's more stressful. I will say that. But it's likely going to end up producing you better results over time. It will. And I can say a huge reason why the public account has outperformed the market so significantly over the past 5 years is because I'm held accountable. That's just bottom line with that, folks. It matters in a significant way. Don't let that be lost on you, because as we know, in the stock market, especially as the months tick on, the years tick on, sometimes you just get bored. Sometimes you start seeing something, something looks attractive that you shouldn't be doing, but all of a sudden you start doing it because it's in, account that nobody gets to see. And so being held accountable is absolutely massive, folks. And I will preach that for a long time to go in the future now at this point in time, okay? Accountability is huge. We even set it up in the private stock group now, where essentially people can share their portfolios with other members and things like that if they want to hold themselves accountable. Because we do know, it's a very, very valuable thing, okay? Next step up here, number 7, is focus on the long term in regards to 3 different ways, okay? One is companies. Focus on what a company's likely doing over the next several years. Forecasting for that company over the next several years. Focus on the long term. Taxes. You don't want to sell for short-term gains because you get absolutely demolished in regards to short-term gains, right? Like, the goal should be, if you ever sell for a profit for a stock, make sure it's a long-term profit, okay? Because we do know if you're taxed on the short term, so let's say you hold a stock for less than a year, you sell it for, some sort of profit. Now you have to pay your regular income tax rate, which is usually much higher than capital gains tax rate. And so it counts as more like ordinary income than at that point in time, which is, obviously, once again, taxed at a much higher place. And in regards to portfolio and portfolio decisions, focus on the long term. Make decisions you're going to be proud of with your portfolio 3 years from now, 5 years from now, 7 years from now. Don't run your portfolio based upon, this is a problem that I see a lot of Wall Streeters get involved into and some retail investors, is they get caught up into this thinking, this thought process of like, everybody's positioned over in these oil and gas stocks right now, so this is where I need to position my portfolio. And, everybody's buying the growth stocks right now, so that's where I need to position my portfolio. Don't run your portfolio like that, okay? Focus on the long term of that portfolio. Make decisions you're going to still be happy with 4 years from now, not 4 days from now or 4 months from now, okay? Focus on the long term always. It's extremely important. I hope you got a tremendous amount of value out of today's video. Those are very important steps I just led you through there. And if you did, let me know in the comments section. That means a lot to me. It makes me want to produce more just straight educational type videos where I'm dropping gems and things like that. So I appreciate everybody joining me as always. Also, thank you for being subscribed. Once again, I invite you to apply for my private group. If that is something you're looking to take your game up to the next level and you want to learn everything I have up here, which is a whole lot of stuff, let's just put it that way, then go ahead and check out the pinned comment down there. You can apply, and we can see if you're a good fit for the private group. Much love as always, and have a great day.